Mr. T.R Srinivasan now joins us, Group CFO with Varroc Engineering. Mr. Srinivasan, the business continues to remain under pressure. I'm just looking at the numbers here. If one looks at the global lighting business, that was under pressure, domestic business is under pressure. Why is that?
It's a good question. You're absolutely right. The business and the bottom line has been under pressure for the last few quarters due to a number of factors. It started with the COVID first wave, which started in Q4 of FY20 and continued into FY21. And post-COVID first wave, when the recovery happened, it was a kind of a V-shaped recovery, and that was very challenging to cope with the sudden jump in volumes to be able to supply those higher demand in the context of a disrupted supply chain, non-availability of labor because of COVID, etc. So we had to really gear up our operations to meet that demand, which came at a higher cost of goods sold, so which impacted margins significantly from Q3 and Q4. Then after that, as you probably know, there is a significant semiconductor shortage which is impacting a number of industries, including the automotive sectors, for the last 2 quarters now, starting around January. And that has taken a toll on the volumes or the demand from our customers as well, both in Europe and North America, and which, of course, obviously has impacted our revenue, which has significantly dropped if you compare it to, let's say, Q3 of FY21 onwards. If you see a trend to Q4 FY21 and then Q1 FY22, revenue has been significantly dropping in our lighting system business. And in Q1, we also had the revenue impact in India because of the COVID second wave and the related lockdowns and the shutdown of the plants by our customers, etc. So combination of these factors is what really has affected the revenues, which is obviously the short term impacts the margins significantly because of the fixed costs which are still there. So that's basically been the story so far.
In the past, you have said that you are committed to debt reduction, but your net debt actually has gone higher because of capital changes and because business is slow. Has your net debt settled down? Will it inch lower or inch higher?
Another good question. Obviously, you are tracking us very closely. So if I again take you back, let's say to March 2020, that's when the COVID impact started. If you look at your gross debt at the time, it was significantly high because we had drawn down the facilities we had to prepare for the disruption and the cash flow and the liquidity challenges that we expected to come up subsequently, which indeed materialized in Q1 FY21. So because of that, the net debt increased significantly during Q1 FY21. But since then, we had taken a number of measures to bring that under control. The first step we did is to cut back on our capital expenditure program significantly. Given the softer demand situation, we didn't have to invest in those additional capacities we had originally planned. So we brought our capex down to almost 50% of our normal level. Then also actions were taken in terms of reducing fixed costs, in terms of the SG&A costs and other costs. That also yielded good results. And of course, a very tight control on working capital was the other thing we did. So because of that, if you see, and finally, we also did a QIP in Q4 FY21 in March 2021, actually, to strengthen our capital base. Due to a combination of all these measures, net debt came down significantly between June 2020 to March 2021. But again, during Q1, it has again gone up because of the supply chain disruptions due to the semiconductor shortage. So we had actually procured inventory and produced our lamps, etc., in the lighting system business in anticipation of the normal demand from OEMs, which did not materialize because of the semiconductor shortage at their end. So which resulted in a high inventory level, which we are currently holding. And that obviously reflected in higher borrowings, etc., to finance that. But now we are actually working to correct the inventory levels and also further reduction in our capex program and so on. So we expect from this point onwards, maybe in the current quarter, it may be stable or may slightly go up. but we definitely expect to bring it down by the end of this year to the March 2021 levels. That's our target.
Right. Just wanted to understand, Mr. Srinivasan, a few things with regards to the commodity price inflation. What is the lag time for you to pass on the commodity inflation on to your customers, and how much elbow room do you really have to be able to do that?
Well, the situation is different between our India business and the lighting system business. In India, we have agreement with the customers for back-to-back price corrections for commodity price increases or reductions. But it happens with the lag, like you mentioned. The lag is between 3 months and 6 months, depending on the customer. But most customers, we get it corrected in a 3-month lag. So that's why you will see in a couple of quarters, like Q4 last year and Q1 this year, the India business margins were impacted because of the lag, but it will recover in this quarter onwards. In the lighting system, there is no formal agreement in terms of such pass-through mechanism. It is taken up case to case when there are significant increases. So we have seen increases in 2 commodities mainly in lighting system. One is resins and second is semiconductors. In both, we are in discussion with our customers, and they have been very understanding and supportive, and those price corrections also will take place in due course.
Also wanted to understand about the new business wins, and more importantly, what's the visibility for not just the next quarter, but the full year as well?
In India, actually, of course, our current product portfolio or the established product portfolio, we have been successful in winning business from new customers in terms of increasing our wallet share. So, as you know, we are the strongest with Bajaj, to whom we supply almost the entire product range. But we are also increasing the number of products we supply to other major OEMs like Hero and TVS and so on. So that is going well. But the main area of focus or priority in India is on the portfolio of EV two-wheeler related products that we have developed, and now we are bringing to market, like the traction motor controller, the battery management system, and so on. And those are getting good traction with the OEMs as well. And we have already backed some significant orders, and we are in discussions for more orders from other OEMs in this space. And this is obviously the future. So we are well placed with our own technology, etc., to capitalize on this. On the VLSS system, we are already strongly established as a leading supplier of lamps for EV passenger vehicles like Tesla, the new EVs launched by the Volkswagen Group, Renault, Nissan, and so on. So we are actually the number 2 in terms of market share for lamps for electrical passenger vehicles. And we expect to continue that by also participating in the new platforms which are getting launched by other OEMs in the coming years.
Okay, talk to us about your EV basket. How are you targeting, what sort of product expansion are you targeting there, the newer geographies too, because EVs are now the part of that mega trend that we are seeing. What sort of contribution you expect from that segment for Varroc in, say, the next 5 years?
Yes, that's what we expect, and that's what we hope for. That's why we have invested heavily in terms of technology development, both in-house technology development. As you know, we have a development center in Pune, where we have more than 500 engineers working on developing new technologies as well as updating existing technologies. And we also, where required, end up with technological tie-ups for specific products or technologies, which also we have done in the EV space. So a combination of that is helping us to bring relevant products to the EV market, which holds a lot of potential in the medium term. Like you mentioned, 4 or 5 years time frame, it should really be a big slice of the overall two-wheeler market. And we are well placed to capitalize on that. And we expect this will become a significant revenue stream for our India business over this period of time.
So are you planning more investments in EVs?
Yes, indeed. We are looking at more product segments and opportunities, but I cannot talk about in detail about those things at the moment. So.
Okay. In the new plants which you've set up in Poland and Morocco, those plants continue to post losses because the volume ramp up that was expected did not come through. What's the outlook there?
See, if you go back in time and look at how we started working on these new plants, we won a lot of new orders from major global OEMs like the Volkswagen Group, Renault Nissan, the current Stellantis, which is Fiat Chrysler, and so on, PSA. About 3-4 years back, we won a lot of new orders, and one of the requirements of this order is to have footprint in geographies where the OEMs were present, to be close to them. So in order to meet this additional demand as well as to increase our network, so we set up these new plants in Morocco, Poland, and also a smaller plant in Brazil. So all those investments were made and these plants became operational, I think about 2.5 to 3 years back. They started production. And as per the original volume projections estimate, by now all of them should be operating in full capacity at much higher than the break-even level and contributing significantly to our bottom line and cash generation. But unfortunately, that didn't play out that way. Initially, because of the auto industry slowdown, which happened in FY20, then subsequently compounded by the corona impact, and then reinforced by the semiconductor shortages. So what we are seeing today is the volumes, revenues of those plants are significantly lower than the break-even level, which is why they are still loss-making. But we expect the situation to start improving towards the later part of this year, going into next year, when the recovery should take strong hold. And then these will start breaking even and contributing to both to the bottom line and the cash flow.
What about the VLS margins? You got this project raised to bring VLS margins stronger. Where are they headed?
So this project was kicked off only about a couple of months back, so it's still early days. This project is supposed to run between 18 to 24 months. That's the time period it will take to see the full benefits of this project. And obviously this project is, we're not waiting for 19 or 24 months to start seeing the benefits. The team is now working along with the consultant actively to identify the various improvement areas, potential improvement areas, and then quantify the impact and also the efforts and the investments required to realize those improvements. And that's the current phase which is going on, which will take us maybe another couple of months to conclude. And then there will be an implementation plan starting with the quick wins, which we expect to already start seeing the benefits of that in Q3 and Q4 this year. And then going into next year, the benefits will be more strongly visible in the results.
I'm just going to mark markets and, Vakrangi software, good old Vakrangi software. I haven't spoken about this stock because of the corporate governance problems they got into a couple of years ago. It's up 12%. And that's what the dangerous part of the market is. It's taken 2 days of shakeout and then back to what could be called as the high momentum trade, where you buy because you like the price, not the company. Okay. Closing comments. You've highlighted some mega trends in Indian automobile sector. Connected cars, EV, personal mobility, scrappage policy. What is the longer term outlook for the industry now?
Yeah, so these are some of the things we are very alive to in terms of the impact of our operations on the environment and also the issue that the industry is coping with in terms of scrap, etc. So the government has this policy, FAME policy, it's on the framework to deal with this. And we expect that should address the issue effectively in due course. And this is the issue, in the sense, more the OEMs are more focused on because they are the ones selling the vehicle to the consumer, and that's where the scrapping issue really comes up. But we, from our side, try to facilitate that by using material in our production which are environment friendly, non-toxic, and making sure the products we supply meet those standards.
So really appreciate your time. So glad you could join us and stay safe. Let's take a break. Markets are doing okay. Don't go by the index, but it's a breadth of the market which is certainly looking much more powerful than what it has looked in a long time.